Good evening and welcome to the Financial News Desk. Let us begin with the key signals from Wall Street last Friday. Due to the Independence Day holiday, U.S. markets closed early with minimal movement. The Nasdaq finished at 25,832.67, the S&P 500 at 7,483.24, and the Dow Jones at 52,900.07, all virtually unchanged from the prior session. Futures after the close pointed to a flat open, with Nasdaq futures at 29,901.75, S&P futures at 7,557.00, and Dow futures at 53,162.00, all showing zero change. This indicates that the market lacks a clear directional catalyst as traders return from the holiday. On the individual stock level, MSTR, or Strategy Inc., rose 7.07%, making it a significant positive contributor among Nasdaq heavyweights. Its performance aligns with Bitcoin seeing its largest weekly net inflow in 3 months, with the Bitcoin spot ETF IBIT recording net inflows of approximately $1.2 billion for the week and gaining 2.62% itself. On the flip side, Tesla dropped 7.03%, the largest decline among major tech stocks. While this drop is noteworthy, it did not trigger the mandatory 8% verification threshold, so it does not yet constitute a systemic risk anchor. There were no other verified abnormal moves yesterday as no single stock moved more than 8% in either direction. Moving to our stock radar for today. The current market state is correction with a risk budget of 0.45. Our first opportunity candidate is AeroVironment, ticker AVAV. The prediction is a rally and pullback or high-level consolidation, with a 55% probability over the next 1 to 3 trading sessions. The trigger condition is geopolitical tensions boosting demand for drones. If the stock pulls back to test its 5-day moving average and stabilizes, a small position can be verified. The failure condition is a break below the day's low or if the market state deteriorates from correction to panic. Position discipline dictates a small of only 2 to 3% of total portfolio with a daily level stop loss. For our portfolio diagnosis, we look at HPS.A, the data center high voltage transformer bottleneck stock. The prediction is relative resilience with a 58% probability over the next 1 to 5 sessions. The trigger condition is holding above its 200-day moving average. Compared to QQQ, which fell 4.5% over the same period, this stock only dropped 2.46%, indicating core demand remains intact. The failure condition is a break below the 200-day moving average or a sharp rise in short interest. The strategy is to continue holding but not add positions before earnings. For risk avoidance, POET is our primary concern. The downside risk dominates with a 65% probability over the next 1 to 5 sessions. The stock has plummeted 43.04% in a month, breaking well below its 200-day moving average. Market sentiment during this correction phase is extremely unfavorable, and we recommend cutting the position immediately. The failure condition would be a recovery back above key moving averages with declining short risk. Position discipline demands immediate stop loss without averaging down. On the global macro front, the 10-year U.S. Treasury yield stands at 4.49%, creeping up from 4.46% over the week and remaining in the 4.4 to 4.5% range. This is a neutral to elevated level, neither signaling loose liquidity nor creating panic tightening pressure. The market is waiting for this week's global PMI flash data for direction. The VIX Volatility Index is at 15.81, within the normal 15 to 25 range and leaning toward the greed end. The low volatility around Independence Day aligns with this low VIX, but we should watch for volatility expansion ahead of the PMI data release. The US dollar index DXY is at 100.86, oscillating in the weak range of 100.6 to 101.0. Continued dollar weakness is generally positive for emerging market assets, but geopolitical risks, specifically unverified technology events, are suppressing capital inflows. WTI crude oil is at $68.78 per barrel, up 1.55% for the week but still in a weak consolidation range of $67 to $69. Gold is at $4,187.30 per ounce, up 1.15% for the week and continuing its narrow high-level consolidation. Neither commodity has given a clear breakout signal. In summary, the global market is in a zone transitioning from risk-off to risk-on. Low VIX and a weak dollar favor risk appetite, but the high Treasury yield range and unverified trade and technology events are suppressing bullish momentum. The failure condition is that if the 10-year yield effectively breaks above 4.55%, tightening expectations would be confirmed. If it breaks below 4.4%, the bias would shift toward risk-on. On the renminbi front, the onshore rate is at 6.7702 and the offshore rate at 6.7837, both within the recent 6.75 to 6.80 range. The offshore rate depreciated only 0.06% for the week, showing extremely limited depreciation pressure. The spread between onshore and offshore is less than 150 basis points, indicating stable exchange rate expectations. Against the backdrop of a weak dollar, renminbi depreciation risk is manageable, providing neutral to positive support for foreign capital inflows into shares. For today's SA share market, we expect the Shanghai Composite to trade in a range of 4,000 to 4,080 points. Last Friday it closed up 0.37% at 4,043 points. Support at 4,000 is solid, but resistance at the 4,100 to 4,138 range is strong. Combined with unverified trade news and the market waiting for PMI data, upward momentum is limited. The most likely active sectors today are utilities and power, which have strong defensive attributes and clear relative return logic, as well as digital asset concept stocks, driven by continued Bitcoin ETF inflows and MSTR's strength. The risk to watch is the technology and semiconductor sector, particularly high-gain stocks, as market sentiment has entered a sensitive period regarding the unverified US-China technology. Northbound capital today has a slightly higher probability of net inflow, around 50 to 55%, but the scale is expected to be small, between 2 and 4 billion yuan, due to sentiment ahead of the trade news and PMI data. To conclude, with Treasury yields consolidating at high levels, VIX low, and the dollar weak, global markets are building up before PMI data. Shares should focus on defense while digital assets show structural activity. Our probability assessment for today is 25% up, 50% range bound, and 25% down.